George Soros lost $1.5 billion in 8 months. Investors withdrew $3 billion from Quantum Fund. How was George Soros defeated by the Russian government for shorting the ruble in 1998? Is George Soros short selling evil, or is the Russian government's malicious default even more evil? Hi my friends, welcome to ZC's Finance channel. This is the 7th episode of ZC's 5-minute financial series. And today we are talking about a rare loss from George Soros, his 1998 failed attempt to short the Russian ruble. After winning against the pound, baht, and even turning losses into profits in the 2000 tech bubble, he thought the ruble would be an easy win. But Russia's unexpected move left his Quantum Fund with a $2 billion loss, a disaster that taught him and us a brutal lesson about geopolitics and market limits. Let's break down every misstep, from his overconfident setup to the final collapse. First, let's set the scene. 1998. Russia was a mess. After the Soviet Union collapsed, its economy relied heavily on oil and gas exports. 40% of government revenue came from energy sales. But in early 1998, oil prices crashed from 20 barrel to 11 barrel. Overnight, Russia's budget deficit hit 8% of GDP, and foreign debt soared to $150 billion, 120% of its GDP. To save the ruble, the Russian central bank raised interest rates to 150% and spent $10 billion of its foreign reserves, half its total, to prop up the currency. Soros watched this and told his team, "This is unsustainable, the ruble will devalue, and we can profit from it." Phase 1. The overconfident setup, May June 1998. 05. Soros didn't just dip his toes in, he went all in, based on a proven formula from his past wins. Here's what he did. 1. Short positions built. Quantum Fund opened a 10 billion short position on the ruble. They borrowed rubles from Russian banks and exchanged them for dollars, betting the ruble would fall so they could buy back rubles cheaper later. They also shorted Russian government bonds, called GKOs, which were paying 120% interest. Soros thought default was inevitable. 2. Ignoring geopolitics. His team focused only on economic data, low reserves, high debt, and ignored political signals. In May 1998, Russian President Yeltsin fired his prime minister and cabinet, a sign of political instability, but Soros brushed it off. Politicians change, but economics don't. 3. Leverage overuse. He used 6x leverage, far more than his 2000 tech bubble play. Why? He believed the ruble's devaluation was 100% certain. By June 1998, the fund's ruble-related positions made up 35% of its total portfolio, a huge bet for a fund that usually diversified. Phase 2. The first crack. Russia fights back July 1998. Soros expected the ruble to collapse in weeks, but Russia fought harder than he thought. 1. Central bank's desperate move. On July 13, the Russian central bank announced it would defend the ruble at all costs. It raised interest rates again to 170% and imposed capital controls, limiting how much rubles could be exchanged for dollars. This stopped Soros from closing his short positions easily. He couldn't convert rubles back to dollars to lock in profits. Becoming golder. 2. IMF bailout rumors. On July 20, the IMF International Monetary Fund announced a $22.6 billion bailout for Russia. The ruble bounced 5% against the dollar, and GKO bond prices rose 10%. Soros' short positions lost $300 million in a week. His team urged him to cut losses, but he refused. The bailout is just a band-aid. Russia can't keep this up. Phase 3. The collapse. Russia defaults August 17, 1998. What happened next shocked everyone, including Soros. On August 17, Russia dropped a nuclear bomb on the market. 1. The default announcement. Russia declared a 90-day moratorium on foreign debt payments, meaning it wouldn't pay back its loans, and devalued the ruble by 34% overnight. It also froze GKO bond trading. Soros' short positions on bonds became worthless because he couldn't sell them or collect profits. 2. Soros' panic exit. The ruble crashed 70% against the dollar in 3 days from 6.3 rubles, 1 to 20 rubles, 1. Soros tried to buy back rubles to close his short positions, but the market was chaotic. There were no buyers for dollars, only sellers of rubles. He had to pay far more than expected. For every one he wanted to get back, he needed to spend 20 rubles instead of the 6.3 he planned. 3. The loss calculation. By August 25, Soros finally exited all ruble positions. The total loss? 2 billion, the biggest single loss of his career at the time. The quantum fund's value dropped 15% in August alone, and investors pulled out 3 billion from the fund. Phase 4. The aftermath. Soros' painful lessons. The ruble crisis destroyed Russia's economy. 0. 5. Inflation hit 84% in 1998. 50% of Russian banks collapsed, and millions of people lost their savings. For Soros, it was a humbling wake-up call. In later interviews, he summed up his mistakes in 3 brutal truths. 1. You can't beat a country that's willing to default. Unlike the UK, 1992, or Thailand, 1997, Russia didn't care about its international reputation. It chose to default to save its economy, which broke all market rules Soros relied on. 2. Geopolitics beats economics every time. He ignored political instability, Yeltsin's cabinet shakeup, and thought economic data was enough. But in crisis, governments make decisions that don't follow economic logic. 3. Overconfidence is a trader's worst enemy. His past wins made him think his formula was foolproof. He used too much leverage and refused to cut losses, a deadly combination. Lessons for modern investors. Don't let past wins blind you to new risks, especially geopolitical ones. Use leverage sparingly and always have a stop-loss plan to limit losses fast. Why does this matter in 2024? Today, we see similar risks in countries dependent on single commodities, like oil, lithium, or facing political instability. Soros' 1998 loss isn't just a story of failure, it's a warning. Even the best traders can't outrun a country's survival instincts. If you love this deep dive into Soros' humiliating but valuable failure, not just his wins, hit like and subscribe. Next episode, we're turning to 2015. Soros' attempt to navigate the Chinese yuan's volatility, how he approached the market, the challenges of capital controls, and why the trade played out differently than his past currency bets. Subscribe now. You won't want to miss this inside look at one of the most talked about Forex episodes of the 2010s. Thank you.